Well, sticking with earnings, then Glenmark will be reporting its Q3 numbers later today. Ekta is with us to run us through what do we expect from there. Ekta?
Hi, thanks for that. Well, for Glenmark this time round, we are expecting a revenue growth of around 15% with EBITDA growth of around 36%. So there should be some amount of an improvement in the margins on a year-on-year basis to 17.4 versus 14.6%, with the profit at around 225 odd crores. Remember, however, the profit is going to be aided by a low base as well, because the profit was down 75% same time last year. Now, in terms of the key things to watch out for, I think the US business would be the most important thing to watch out for, because in Q3 FY18 the US business was down 40% on a year-on-year basis, so that low base is going to aid them. But in Q2 of FY19 the US business had picked up to an 11.4% growth after declining for 4 quarters. So the hope is that that kind of momentum is going to sustain for Glenmark into this quarter as well. They have a couple of drugs such as tacrolimus as well as Welchol, which is going to be aiding in terms of the overall portfolio. However, watch for price pressure, because in the past the company has been quite vocal about price pressure. So whether or not that has stabilized as per what other people have said would be important to watch out for. In terms of the India business, it will be interesting to see, because it was up 8.6% in the first half, and most of the companies have been mixed in terms of their India business performance. So, for example, some of them just yesterday we saw a growth of only around 7 to 8% come in on the India business for Sun Pharma, and the expectations is that whether or not Glenmark, which has a very strong India portfolio, especially when it comes to dermatology, whether or not they will manage to outpace industry growth. So overall, expect US, India to be the key focus areas for Glenmark, as well as any sort of update with regards to their out-licensing opportunities. Remember, they've done 3 to 4 regional out-licensing deals just in the quarter gone by. So maybe there could be a bit of inflow of cash come through on account of any sort of milestone payment there as well.
All right, Ekta, thanks a lot for that. And we also have Anisha in the studio who will tell us what to expect from Voltas today. Anisha?
Well, hi. So yes, with respect to the consumer durable space this quarter, the trend has been that the top line growth has been decent, but it is the margin which has been the key pressure point. And that's what we're expecting from Voltas as well. As far as the top line is concerned, we're expecting a single-digit growth there. The margins, however, are expected to deplete and come down to 8% level. And even if you look at the profit figure, pretty much flattish on a year-on-year basis. Now, let me break down the performance for you. As far as the AC business is concerned, it is expected that the high channel inventory is expected to liquidate, as well as the price cuts and the competition will keep the volumes under pressure as well. And that's the reason we are expecting just a single-digit growth when it comes to the ACs. In fact, some of the brokerages are also working with a decline when it comes to the AC volumes this quarter. So that'll be very important. As far as the margins go for the AC business, remember last quarter it had halved and come in at around 6% level. This time we're expecting that it will improve sequentially, but on a year-on-year basis, we still might see a dip of around 400 to 500 basis points. What is expected to be good this quarter and drive the performance? That's the EMP segment, or the electromechanical projects segment of the company. That is expected to bring in a double-digit growth, and that has been adding to the company's margin as well. Overall, the bottom line, there might be higher taxes this time, and that's why we are expecting a flattish bottom line. Other key things to watch out for: what's the management commentary as far as the margins go, and the new JV that they have formed with the Turkish appliance maker. That will be important, guys.
Absolutely. We'll keep an eye on all of that. And from the FMCG space, we watch out for numbers coming in from Nestle. Mangalam, tell us, what's the street expecting out there?
Well, the street expects a good set of numbers, and the stock is virtually just about 10% away from its record high. But for valuations, remember, Nestle trades at the highest valuations in the FMCG space. Currently, despite being 10% off its record high, trades at 51 times FY20 earnings. That's more than all the other players in the FMCG space. So the street is working with a growth of around 12.8, 13% on the top line. The number that you'd be watching out for would be closer to the 2,935 to 2,950 crores in terms of a top line. For the annual growth, we're working with a number upwards of 10,000 crores. Remember, Nestle follows a calendar year, so this is the 4th quarter CY18 for them. Margins likely to expand because most of Nestle's input basket or raw materials have seen benign inflation. So we're expecting an EBITDA growth of 13.5% and a margin expansion of close to around 20 to 30 basis points. 25% is on the cards, most of it led by higher gross margins. Net profit on the back of that likely to grow by 43% optically. 446 crores is the number you should be keeping an eye out on. Remember, in the previous comparable quarter, the company had made a provision for close to around 81 crores. And if you adjust for that, the net profit growth is pretty much the same as the EBITDA growth of around 13 to 13.5%. For Nestle, the important thing would be the domestic revenue, which accounts for majority of their business, likely to grow between 11 to 12%. International revenue would be slightly subdued, led by Bangladesh. Watch out for raw material costs. While they've remained benign year on year, we will see some gross margin expansion. Quarter on quarter, we may see a bit of a dip. So overall management commentary on how the new products are doing and what they're doing in terms of spending, in terms of launching those new products would be important.
All right, Mangalam, thanks a lot for that. But also tell us about the cues from the F&O space.
Well, the cues from the F&O space, 3 days running, the Nifty has seen a sharp sell-off in the last hour of trade. And yesterday, it also broke below the 10,800 mark. And most of that is on account of cash market flows coming out from the FIIs. So last 3 days, 2 of them, we saw both the FIIs as well as the domestic institutional investors pull out some money from the cash markets. Yesterday, the FII selling intensified to around 677 crores, though the domestic institutional investors did put in 713 crores in the cash market. But the FIIs, they're buying in index futures, and that is something that we've seen for the last 3 consecutive trading sessions. Yesterday, too, nearly 2 long contracts added per short contract in index futures, and with that, the FII long exposure stands at 55%. The most important cues to watch out for today will be the Nifty as well as the Nifty Bank weekly options expiry. For the Nifty, the range, the maximum open interest is at the 10,900 call and the 10,800 put. Remember, the 10,800 put has a premium of close to around 30 points. So that's telling you that 10,750 to 10,780 would be an important support zone for our markets, just as far as today is concerned and where the smart money is placing their bets. For the Nifty Bank options, which is at currently 26,885, is the 27,200 call and the 27,100 calls, which are seeing a fair amount of writing. So we'll keep an eye out on that. And finally, one stock we'll be watching out for is DHFL. It's got news backing it. The resignation of Harshil Mehta as the joint MD and CEO, and the stock comes out of F&O ban, perhaps the first time this series.
All right, Mangalam, thanks so much for that, but I hope the Josh is high today.
What for, sir?
All right, wishing you a good day. Both of you all a good day as well.
Seems like you're an old hand at this, so I'll probably take some advice from you post this as well.
Please do, please do. You can come to my desk. You can ask me right now as well.
No, I'll come to your desk.
Okay, all right. Thanks so much for that. Moving on then, we have Manisha Gupta who's joining in to run us through all the cues coming in from the commodity market. Hi, Manisha. Good morning.
Morning, Nigel. Thank you. Well, the crude oil prices have had yet another strong day, and we saw nearly a percentage to 2 gain in both the crude varieties. If you look at the U.S. crude, that one is trading at a 2-week highs. You have the Brent prices almost at a 2-month highs right now, and that is on the back of positivity on hope that the U.S. and China talks that begin today in Beijing will go through well. Apart from that, it also is about the OPEC cuts, Saudi pledging for deeper cuts in exports and supplies, and that has been supportive. And then markets also are looking at better demand estimates going forward, but much really would be in sense of the China data that comes in today and tomorrow. The reaction of that is what most of the asset classes would be taking in. The U.S. dollar index is trading at 2-month highs back yet again, and that seems to be capping too much gains in many of these commodities. So whether it is gold prices, which actually took some support because of the weak consumer price inflation numbers that came in from U.S., but it is the strength in U.S. dollar that really seems to be doing the trick and not letting the prices run up too much.
Okay, Manisha, thanks a lot for joining us and giving us all those details. But for today, that's all we have on Power Breakfast. Bazaar Morning comes up next. Stay tuned to CNBC TV 18.